Time, Ajay Piramal, the chairman of Piramal Enterprises, speaks to ET now post the Q4 numbers. Stock price down 9%. Listen into what he had to say.
Mr. Piramal, thank you very much for joining us and congratulations on braving a very difficult environment this quarter as well. Let's start by understanding the reported numbers. There's a loss you have booked this time round. And then there is also adjustment of when you normalize it for the environment, the COVID impact, then the business shows quite robust growth. If you could explain the normalized part and what the adjustments have been taken this quarter.
So if you, the results show that during the year, we have got a turnover of 13,000 crores and a profit of 21 crores. Now, this is really the profit has been on 21 crores only because of two accounting entries that have taken place. The first one is the DTA provision. As you would remember that in the last budget, the finance minister had given companies the option of going in for a 25% corporate tax rate compared to what was then 35%. But she had also said that the other benefits would not be there. So DTA, which was more of is an accounting thing, and therefore we have written it back. There was goodwill on the books and we've written that back. That's about 1,800 crores. That has no impact on cash flow in that sense. Secondly, we felt that under the present environment, it is better to be conservative. And therefore, we provided for an additional 1,900 crores as a COVID provision, if you may like to call that. So these are the two things which have made the numbers look that the profit is only 21 crores for the year, and then the quarter there's a loss of 1,700 crores. Had it not been for this, we would have shown a good growth in profitability. We would have had the overall profit would have gone up to, I'll give you the exact numbers. We would have gone up in this quarter by 40% to 807 crores. And for the year, the profit have been 2,600 crores. In this, there is also an additional gain, which is there because of our sale of DRG, which is of 560 crores.
Sure. Mr. Piramal, talk to us about how did you arrive upon this provision? How did you measure this provision to be taken at this particular number? And what's the outlook of your business? Do you have, as we sit today, the way you would have taken your calculations into account forward?
No, in this, we have a book of 50,000 crores. Till now, the provision we had was about 1.8%. We have now taken it up to 5.8% of the book. I thought this is a conservative way of looking at how things are, because it's very difficult for anybody to estimate what will be the issues with COVID. And therefore, we felt that let's take a worst case scenario so that let's assume that the economy does not come back to normal for a time, for a few quarters. And even then to come up to the 6.57% growth rate, which is what we were all hoping for, would not come in till FY22. Under those circumstances, what could be the possible stresses in the environment is what we've looked at. This is, in our belief, this is the worst case scenario. And therefore, we said that let's provide for that. That's how the provision was done.
Mm-hmm. Mr. Piramal, your situation right now is quite fairly liquid. If you could update us the exact liquidity on your books right now, and also on the out of the overall book, you must have looked much more granular into the kind of some of the clients which are relatively fragile, others are robust. So how does the asset quality trajectory look from here on?
So, first of all, about our liquidity at the end of the year, 31st March, we had about 8,000 crores as terms of cash or bank limits that we had undrawn. In post the COVID and at the height of the COVID, in April, we could draw 4,000 crores of these are long-term bank loans that we have got. And therefore, we have liquidity which is adequate. One thing I find is that now the public sector banks particularly are looking at giving long-term loans to those companies where they find that there was a strong balance sheet, good management, and good corporate governance. And that is the change that I'm finding for the last few months, which is a positive change. Besides that, we've looked at the quality of assets that we have. In the real estate, we did a project by project analysis to see where we are. Even in a stressed scenario, we found that about 70% of our projects that we had in a stress scenario, still the security cover is about 1.3 times. And in 80% of these, it is 1. So therefore, by and large, the projects still in a stressed COVID scenario still have adequate security cover.
Mm-hmm. For a moment, let's also get your thoughts on how many quarters do you see the pain to continue for lending business in particular? And how do you marry it with the measures which our regulator has taken to ensure liquidity reaches lower and widely in the country? And also your own cost of borrowing, you've been changing the mix of your borrowing last couple of quarters. How does it stand now? And some color on your cost of borrowing?
Coming to the liquidity in the system, I think the COVID scenario, as I look at it, these are uncertain times as far as COVID is concerned. Normalcy I think we are going to start seeing some attempts towards starting off business. They've already seen some of it. In fact, I can say that in many places, production is carrying on. For instance, in all our pharma plants, which are across several states, whether they're in Maharashtra, whether they're in Gujarat, they are in Madhya Pradesh, as well as in Telangana, you're seeing that activity has started. In another business, we've got glass manufacturing plants, which are in Gujarat, and there also activity has started. But for things, for normalcy to resume, I think it'll be a slow start. Probably in the quarter, July to September, you will see some more improvement, and towards normalcy would be more in the third quarter of the current year. Mm-hmm. As far as you asked about cost of funds, our cost of funds today, the public sector banks are giving anywhere about 9.5, and between 9.5 and 10% would be the average cost of funds that is being currently got at.
Also talk to us about how's your housing finance business going, your consumer finance business, and you've also reduced your wholesale borrowing quite a lot as a conscious strategy last couple of quarters. How things stand right now?
So as far as we had said that at the beginning of the year as well, that we are going to reduce our loan book and increase our debt equity to improve our debt equity ratio. So if I see that the net debt for the year has fallen by about 17,800 crores. And that has been achieved because one is we've got additional capital of 14,500 crores during the year. You would recollect that in some of my interviews with you as well, I've emphasized how we need to bring in more capital. And we've done that through a series of means. We have raised preferential capital. We did a CCD with CDPQ, who's our existing shareholder. We raised money with a rights issue, and this got us about 5,400 crores, the CCD plus rights. We've recently had a transaction at the time of COVID for DRG, which got us $950 million, which is...
That was, of course, an exclusive interaction with none other than Ajay Piramal. They declared their numbers. Stock is down today, maybe because of the COVID provisioning that the company has taken on account of the Q4 numbers and the sort of numbers provisioning that they believe should be done. On that note, we're taking